Welcome to Infrastructure Week, where we cover all things lending tech and transformation. I'm Dave Silverstein, founder and CEO of NED. All right, everybody. Welcome to Capital Compass. My name is Dave Silverstein. I'm the CEO and founder of NED. We have an incredible guest joining us for today's conversation. I want to welcome Aron Kurlander. Aron is the Director of Economic Development and Chief Lending Officer at the Greater Jamaica Development Corporation. Aron and I have gotten to know each other, over the last year, working in and around small business lending, and really excited to have him join the conversation today. Aron, welcome. Hope you're doing well.
Thank you. Yes. Hope you're
Awesome.
doing well too.
It's great. We're good. I mean, we're here both in New York. I think we're coming off of a rainy weekend. So there's a little bit of sunshine out, which is always a good thing. Aron, why don't you give us a little bit of background on the organization altogether? Would love to have a sense on what your day-to-day is like, maybe a little bit of history of the organization and what you're focused on today.
Yeah, so Greater Jamaica as an organization is over 55 years old. It was founded, so folks who don't know New York City, we're in the southeast part of Queens County, not that far from JFK Airport. And, this used to be a big, back, I'm guessing, in the probably in the 40s and 50s and maybe the 60s. It was a huge hub of commerce, Jamaica, Queens. It had major banking institutions, major department stores, and all that sort of went away as a result of white flight and the conditions in New York City in those years. And Greater Jamaica was founded by the RPA, actually, the Regional Plan Association, to address some of those issues. We have major transit infrastructure in Jamaica, Queens, and the RPA felt and still feels that Jamaica will play a big part in regional transportation, and as such will be a regional business hub in addition to having good access for the residents of the community. So we were founded, like I said, over 55 years ago, and our purpose was to make Jamaica a better place. I guess it's a very simple kind of thing, but it's hard to sort of make anything more concise than that. But to create a better quality of life for the people who live and work in Jamaica. And one of the things that was done back in 1979 was we started a revolving loan fund, which eventually became a certified CDFI. And it was there to serve the entrepreneur community of Jamaica, Queens. There was a lot of redlining that went on back in those days here in the area, and you basically couldn't get a loan if you from a business loan from a bank if you were in Jamaica. Obviously, there were other type of bad lending practices that took place in a community like this, but the redlining that existed for the businesses is what this loan fund was originally set up to give businesses a place to borrow from, even though they were in Jamaica, Queens, and banks were not lending there. Since then, things have changed. Banks do lend to businesses in Jamaica, Queens, thankfully, but our loan fund repositioned itself to serve those that are not bankable, and as a general rule from the small business perspective. And that's where we find ourselves operating today.
Got it. And thank you for that. And as a child of Long Island, I know Jamaica quite well as the transportation hub that you mentioned. I would say crossing over at Jamaica to get into the city through my youth is my sense of the community, and grew up in and around or very close to the community. But for those that are kind of listening and aren't necessarily aware of Queens broadly and the makeup of Queens, the diversity, the dynamics of Queens, tell us a little bit about the types of business owners that you're serving today. What is the breakdown of sectors, or maybe share a little bit about some of the businesses that are coming your way that you're serving on a day-to-day basis that are really doing the work that you're describing, making Queens a better place altogether.
Sure. So we both do loans and general technical assistance to businesses in different categories and different types of ways. On average, a little over 50% of our borrowers are to Black-owned businesses. The same is true. A little bit over 50% of our lending goes to women-owned businesses as a general rule. And then the other demographic categories seem to sort of be varied and change from year to year and a little bit reflect the community as a whole. And they tend to lead towards Asian, Indian subcontinent, and Latino as the two other major categories that appear. But the percentage seems to fluctuate a little more. The Black-owned businesses tend to stay towards the top end of our lending, like I said, between somewhere north of 50%, probably closer to 60% of our lending, and our technical assistance goes to Black-owned businesses throughout the Southeast Queens area. And as far as categories go, I think if I was to look at the historical perspective, I think those change over time. I
Sure, of
think
course.
there's definitely a concentration some in the early years on purchasing of real estate, but as the price of real estate, when I say early years, I'm going back to 1979 plus, right? So in 1980, you could have bought a building in Jamaica, Queens for a few $100,000, whereas today that's unlikely that you would be able to buy your place of business for that kind of money. So we shifted. We were doing a lot of, I would say there was a mix of, say, about half retail, half industrial, like manufacturing or something
Sure,
like
sure.
that. Those sectors have shifted somewhat. We still do a considerable amount of industrial and manufacturing, but I think that retail and construction make up a bigger part of the portfolio today,
Got it.
and to some extent, daycare and things of that sort.
Interesting. And as you look at the, small business owners and work to qualify them for financing, maybe share a little bit about the operation, right? Is it a small team, you and a few others that are working on the front lines to underwrite and to close? Maybe if you can, share kind of what the day-to-day is like. I realize, in our prior conversations, the goal of your organization is to obviously grow and to also, enhance the way it underwrites so you can qualify more borrowers. Would love to get a sense of, where your operation stands. What types of technologies are you using? What are some of the opportunities you see in terms of improving the way you underwrite these types of individuals? Let's start there, and we can kind of go down the rabbit hole of the moves that you're making to evolve.
Sure. So it's just like you said, it's a small team. It's me and a few folks. And we always say that we're a conversational lender. So really, we're not going to move alone very much without a long conversation first. Probably an in-person conversation, at minimum, a virtual conversation. So you're going to fill out a very small pre-application online. That's going to go into our processing queue. And then you're going to get a call on the phone or such and say, like, hey, tell me a little bit about your business. Tell me why you need to make this, why you want to make said investment, or you want to borrow X, whatever it may be. And we'll figure out if we're the right lender for you. Because if there is someone who can give you that money quicker and better or cheaper, we're going to send you there. So that's the first thing. And then, once we realize that you are the right borrower for us, we try to figure out a path forward on what you need. So that's sort of the first level. And like I said, we're a story-based lender. So we're talking, we're chatting, before we get to the actual processing of anything, we're conversational.
So
And
relationships are key, is what I'm hearing. Tell me,
definitely.
and so as you, think about developing relationships, what's your approach? Because I think when you look at your process and then kind of set it aside or set it beside some of the more larger bank automated processes, you're really getting to know the borrower, right? Like that's kind of core to your operation. Like you know, how do you really build an operation around that? How do you really invest in relationships to make sure that they turn into, strong qualified borrowers? It sounds like you're very much kind of within the fabric of the community, and that's core to the value proposition of the overall organization.
Yes, it's very much core to the value proposition. So we're here as a nonprofit to make a difference. And in order to do that, we got to make sure we are meeting the needs of the community where they are, and that happens by creating relationships. We have the luxury of not being a traditional lender in the sense that we're just looked at on a quarterly basis on how many loans closed, and the rest of it doesn't matter. So the rest for us does matter, and we want to make sure the loans we make matter. And as such, those relationships are key. And we also have to figure out where do we fall within the greater lending sphere, right? If you could just go online with a few clicks and get a loan, then again, maybe we're not the right lender for you. You may be better off with those other lenders. So we want to make sure that we're servicing those who fall through the cracks.
And so if they're coming to you, in the fashion that they are today, would like share a little bit more about like what their prior experiences might have been with other lenders. Are they coming to you after having challenges with larger lenders? Are they coming to you as a first choice altogether? Given kind of the proximity you have in the community and the nature of the borrowers altogether. What's the experience of the borrower when they show up? I would love to get a sense of that.
Yeah, so it varies. In some cases, we are the first call they make, but like I said, if we're the first call you make, and you're a credit-worthy borrower who can get money from a traditional bank, then we're probably going to send you there because that's really where you should end the day.
Yep.
But so that happens, but that's not the general loan we're going to make. The general loan we're going to make is to be who probably was either turned down by a bank or who has some issue that got in the way of them getting that loan, or somebody who may have a loan, but maybe not even from a traditional lender, maybe from one of the not from a CDFI and not from a bank, but from an alternative lender, let's call it. I don't know what category you want to put them in. And they say, hey, I got this loan, but this loan is a problem. And I'd like to figure out a way out of it. So we usually, like I said, because we want to hear the full story, we get folks from various different financial backgrounds coming to us, but usually there's an obstacle that has to be overcome.
Mm-hmm. And so if there's typically that obstacle, it means that then means, or I guess it sounds like your qualification process needs to be one where you help them overcome that obstacle. And so it sounds like you're looking at different types of data. It sounds including story-based data, character-based data. Tell us a little bit about how you help those borrowers, leap over that hurdle if they're coming to you with such a challenge. What is the process like? What types of data are you looking at to make sure you're seeing kind of the holistic picture of the business altogether? That would be great. And also, like, what types of tech are you using today? Is it truly one-on-one? Are you looking to technology to help solve the problem, to clear a path forward? Any background there would be great.
Yeah, sure. So I guess we are a story lender, so we hear the story, but we need to have documentation that sort of goes hand in hand with that story. And so if a business comes to us, and we'll just make up a story, everything was going well until X happened, and then X happened, and now this is where my business is, but I can get back to where I was before X if I had this loan that would solve for whatever problem it may be. And we want to see that. We want to see where you were. We want to see where you are. We want to see why that corrective measure will get you back to where you were. That's not kind of thing you could take to a bank usually, because they're just going to look at the most recent, financial history and say, this is the loan we're prepared to make, or this is the loan we're not prepared to make any loan because, it doesn't work for us.
Yeah.
To that end, we are very flexible in how we'll take in this information. But by being that flexible, it essentially also means that we're limiting the number of loans we could do, because we don't lend as we're not a tech-driven lender per se, who could just churn out loans. So, you could spit out 1,000 applications. It'll
Yep.
decide 150 are good, and it'll proceed, let those proceed. We're having a long conversation that may end up saying, it doesn't seem like there's going to be enough cash flow to make this loan. And we invested a lot of time with that business. So we are looking to technologies to help speed that up. We're looking to technology to help us understand our borrowers long term, to track their progress. And when it comes to technologies, we're still in the early stages of that, but we've been employing a couple of small things along the way. Getting better CRM type software to understand to improve our underwriting process, to help that intake process move along, to help us report on a lot of what we do as CDFIs. We're often using funding from various government or foundation sources, all of which require, extensive reporting on the impact we make. So our impact reporting, our impact KPIs are tracked digitally, and that's an investment in time and effort. But as we do more, because we do want to continue to serve more and more customers, we do realize that technology is really the way to help us maintain, to be efficient, us pay our bills and still at the same time.
Of
So,
course.
and we've been during the pandemic, we started serving many more clients than we did before. And without technology implementation during that period, I don't think we would have been able to, because we just weren't set up to do that kind of volume at that time. Obviously, though, that's come to an end, but we're still working on some grant programs and things of that sort, where we're sorting things through, and we're using the data the best we can. Some of them are integrated with other pieces of software, so a client could connect to. Some of them are not. The more in depth we get with lending, probably the bigger the loan, the more we're going to end up probably looking at pieces of paper, not necessarily paper, say, but like, PDFs or Excel sheets or things like that.
Got it. And so it sounds like, the way you're setting up, or the way you're starting to set up your lending stack, the emphasis on CRM, like really strong or good quality back-end infrastructure to make sure, the block and tackle loan management is happening. And, as you think about the nicer to haves, right? Those jobs that you want to do better, faster, cheaper over time, those are different types of solutions that kind of inch out towards the direction of the borrower. Are you looking at particular types of either origination, qualification, closing solutions, at this moment, to kind of build out a stack that helps you to kind of amplify that story, but also kind of make sure you're bringing down the time, the cost, like all the stuff that goes into getting an applicant over the line?
Yeah, and so it's one of the big challenges is that often the businesses come to you when they need the money right away.
Right.
And again, we're servicing hard to serve clients as is. The easier clients like I said, could go to a traditional bank. We're getting folks generally who need extra assistance. So they need the money right away. They need extra assistance, and their needs are not going to fall into general categories. That's why we call ourselves like a story-based lender. So all of those things don't fit easily into a metric. Like you can't just say like score something and give me a score of 5 and this person's going to move along. So that's where we have to balance technology with those relationships and with community. And that is the challenge. I can tell you where we're going. We're going definitely when it comes to the closing process, we're moving in a direction of technology. So once that loan clears for closing, we want technology to be a big part of that, because that will really enable us to sort of have a lot of people who spend time on that part of the process refocused to the origination side of things. So closing is definitely an area where we see technology playing a bigger and bigger role. And also follow-up, we see technology playing a big part in staying in touch with our customers in a way that perhaps won't be taxing on them and won't be taxing as much on us. So if they could get surveys that are tailored to them, that are pre-filled with previous answers, if they could get if they could upload data as opposed to having to fill out some sort of questionnaire that they would have to send back. Again, just trying to lower the burden on the business as well as move things, streamline things for us. On the
Here's a
original,
question. That's actually interesting. Here's a question. So how many touch points do you have with a borrower before you get to closing? Like actual engagements, whether it's email, phone call, in person, portal driven. Would love to get a sense of that number, because if you're at X and you want to get to half of X, and you think closing is the part of the workflow that can help you bring that down, that's interesting. Like I haven't heard that before.
so I would say that I don't have the data. I can't tell you how many touch points, but
Anecdotal.
it's got to be 30 or 40 touch
Yeah,
points
yeah,
more. Because once we get to the closing, then it becomes a whole when, how, what about this
sure.
term, that term, or they find an issue with this part of the closing process, that part of the closing process, or scheduling between the various partners, and all of that becomes part. So we're trying to make that process happen quicker and easier for everybody.
Gotcha.
I think every organization is probably different, but for us, I think that's one area where, because we know we still need to maintain the high touch aspect of the underwriting, we're trying to make the closing part as automated as can be, for
Got it.
both internally for us and for the customer as well, while still maintaining that face to face nature of what we do. But there are some businesses, there are some programs that we run that are tailored, that are specific in what their objectives are, and what kind of businesses would fit that model. And it's for those kind of programs that we can identify and can silo into specific type of programs that we want to see technology playing a bigger role. So not stopping what we do, not changing the nature of those relationships, but if we have a product that is tailored to one specific type of lending for one specific purpose, and we have some way of analyzing it with bank statements as opposed to tax returns, and we could digitize that process whereby which it could move quickly. We want to do that.
Understood.
So
And so if you were looking at technology, I think for every lender I've met, it's always work in progress. You're always looking at different solutions to enhance the lending stack. One of the things that I always find interesting in talking to you is you have a point of view on where the qualification process is heading in terms of data. The types of data that you're using today, the types of data lenders want to use tomorrow to underwrite small business owners today. Would love to get a breakdown of the data sources, right? Or the types of data that you're looking at the moment, right? To qualify these borrowers, and like what's missing from, the picture for you to make a decision, or for frankly, to even qualify a borrower, or take a look at a borrower that might not fit the mold. That are coming to you with different types of business models, or different types of like sector backgrounds or dynamics. Like, what are the things that are really missing from the picture today that you think are a meaningful add as we kind of evolve, all of us, not just from like the lender side, but from the tech side here as well.
So I'm gonna answer this, but it's gonna have to come full circle.
Take us on the loop. All good, Aaron. It's all good.
We do see a lot of businesses coming to us who have existing loans, and they've
Right.
gotten these loans via various ways. I'm not talking about a loan with Chase or Citibank. I'm talking about a loan with a lender who no one's ever heard of, but yet they have a loan with them, meaning no average person has heard of. Yeah, the average person on the street doesn't know this company. These loans tend to have daily draws, or very quick payback periods, months, that are based on some formula. Usually they're based on their credit card transactions or their daily average deposits or something like that. And these lenders are reaching out in an aggressive way to borrowers to pitch their services and pitch their loans, I should say, and close those loans. And that, let me take a step. That's what happened a couple of years ago. That's how everything was sort of running. And I would see borrowers coming and say, I have this really expensive debt. These folks really have hurt the cash flow of my business. Yes, I did sign up for that loan. I did take it. It was quick money. I needed it for whatever reason. But it was a horrible mistake on my part. Can you help me out? And what I've seen more happening now is, as the world has gone the route of, I don't know what the right word is, maybe a technologist would know it, but more of a sort of an API kind of world, or a synchronized kind of world. There's the controller of that data. So you're buying you as a business subscribe to a point of sale device. You use QuickBooks or some accounting software, or you use a merchant service of some sort.
Yep.
And they now understand a really unique part of your business. They sort of could really understand in a concrete way your average daily sales, your average credit card transaction, some key data point that they're measuring.
Even more than that, they know your inventory, they know your accounts receivable, they know not just what's happened yesterday, they know what potentially is about to happen over the course of the next day, week, quarter. Yeah, it's backward and forward looking.
Businesses in your industry just like you, and they know how they're handling what's going on in their businesses. So I'm just going to use the point of sale terminal because it fits in well actually what you're talking about. So you're managing your restaurant. You have this point of sale terminal. It manages your daily ticket, so that we know your daily tickets for each table. You're putting in there your cost of goods. You're putting into that point of sale all sorts of stuff. And whoever sells you that point of sale terminal knows quite a bit. And they have the ability to sort of decide to offer you a loan, knowing a lot about you without ever having collected anything, just because they're managing your data. And while some of that is easy in the sense it's just a 2-click loan, literally just pops up on your screen. It says, hey, you want a loan this amount with this payback. And, you couldn't think of an easier process. It's not exactly a democratic process because no one else sees that data.
Right.
No one else has the ability to get you the best deal on that loan. No one else has the ability to talk to you and say, like, look, while this is 3 clicks, this other thing may be 10 clicks, but it's a much better deal. So, those things they're not transparent. The industry is, like I said, it's siloed. Businesses don't have the ability to shop it around without doing the old-fashioned thing, which is going from bank to bank or going from, lender to lender to get that better deal. And that bank may not have as much information as that point of sale terminal has.
Right. And so if you look at a bank account is giving you balances. Bank account is giving you deposit expenses, maybe categorizing it well, and depending on the bank, it's up in the air on how they kind of parse certain types of transactions out. So you're saying that a point of sale for an underwriter, for a modern lender like you, actually holds more value than a potential bank account? Is that kind of where you're going, or it holds value as much or potentially more? Or
I don't know if it's more. I can't tell you that if it's more. I can tell you 5 or 6 years ago, maybe even more, we have a loan committee, volunteers who review our loans, right? They're bankers who, like I said, as a nonprofit, this is sort of community give back. You're a banker, you're a lawyer, you're an accountant. You're going to volunteer your time to hear out loans, right? And approve them or disapprove them and such. And I had a small business banker, who told me some years back, I could tell a lot more about a business by looking at their bank statements than I could by looking at their tax returns or any financial statements they're going to give me. But she was talking about the small business. We're not talking about companies here. Because to the small business, how things happen on a day-to-day is what matters. Now, she said that before the boom of technology even happened, before the point of sales controlled all of that environment, before the 2-click loan. And, it's just an extension of that same idea. The closer you are to understanding how every second the business operates, because the tax returns told you a year, your quarterly financials told you quarterly. The bank statements are telling you every transaction, right? But now sometimes they're being bundled into daily deposits on credit cards. But what if you wanted to see how that all breaks out, where you're,
Right.
how big, how small? The point of sale system knows that.
Right.
The system knows how you're comparing to other folks in that industry better than traditional lending. So that data is sitting with one entity, and that entity has a better insight, and more control than anybody else, than any other possible viable lender. And I think one thing that as an industry, we should think about is, how do we make that data easily transferable to other lenders so that they could also offer competitive products? How
And
could
so let me
data?
break this down. This is super helpful to hear, because technology plays a role here, right? Whether it's infrastructure, whether it's the point of sale partners themselves, you're saying, for the sake of, frankly, leveling the playing field for the borrower, for giving the consumer, the small business owner, the option, allowing them to really take the data that's occurring on these platforms, whether it's a Square, a Toast, any Shopify, for instance, and any number of other point of sale platforms. If they were able to very easily take that data and provide it to different lenders for underwriting, that would allow for them to potentially get qualified for really strong products, stronger rates or interest in fees, things of that sort. Is it a completely dark box right now? It's when let's say a retail business or a restaurant, for instance, based in Jamaica, comes to you and they're operating off of these systems. Have they ever tried to provide this data upfront, or is it kind of just moot because it's so difficult? Either they can't get it off the platform, they can't provide it in a serviceable fashion. Maybe they've given it to you as like a raw data file, but you can't make any sense of it. Has there been that friction yet, or is it just completely off limits right now?
And we've tried the exports or things like it never seems to work.
Right.
It just, at least at the businesses that we're dealing with here, again, these are like storefront businesses and things like that. They're giving me screenshots. Like, that's as good as I'm going to get.
Right.
And
Right.
it's just not easy enough. I
Right.
feel like it needs to be a very, very easy process that anybody could walk through, that really could help them shop that loan, and not keep it siloed, because that data really belongs to the business, and they should have the ability to shop that around and get the best best loan product that business can get.
Got it. And so in a future state, right, if you take a look at let's start with what we have today. So you have open banking. It's, in the United States, open banking, even connecting into a bank account, is hard enough. It's not perfect yet, in the United States, and lenders, have a hard enough time, having visibility into bank accounts. The next step would be, engaging with or having visibility, a layer of transparency into point of sale systems in a nuanced way, where, especially for an organization like yours, a nonprofit lender that is looking to provide fair rates, it is incumbent on not just the borrower to be able to provide you that data. It's incumbent on you in time to have the systems with which you can kind of underwrite against that data, because that's what the truth is. Like, that's the performance of the business today. And so what do you think needs to happen, right? Not just in terms of the systems involved, right, in order to achieve that future state. Like, what do you think needs to happen with the borrowers? Is there a level of education that you think needs to happen with some of the borrowers, in order for them to, seek out that capability, for them to go to their POS systems and say, hey, I really need a user-friendly format with which to, export my data, ingest it at, this particular type of lending portal, whether it's for Greater Jamaica or otherwise. Like, what are some of the biggest things? You could probably 150 things, but if you had to look at like one or two things that you think could be good first steps, where would you go with that?
Well, I mean, the first thing I would do is I would say, look, they instead of just say click here to get a loan, it should be click here to get a loan from us, or click here to do something, to shop it or something like that. Something that alerts them to the fact that there's not only one path to getting a loan against this data.
So
you
you're
know.
saying for the POS systems that are providing their own capital, right? They should be actually incorporating choice and option onto the platform for their borrowers to see what else is out there using the data that's occurring on this platform. Gotcha.
And look, they whatever they sell them these POS systems, they're telling them how this great it is and how great it's going to be for their business, and why this is going to make them a better business. It'll make it more efficient, and that's the purpose of using these systems. And then on the tail end, they're not letting them. They're not. It's not that they're not letting them. They're not making it easy, right? The POS is all about making this process easy and trackable. They're not making the process of shopping for a loan easy. They're making it easy to get a loan from them. They're not making it easy to get the best loan I can get.
Got it.
And I think
Yeah.
that would be something you'd want to add to a POS system or to some platform, sort of help me get the best loan I could get. And I'm not prescribing the exact way that happens. I don't know, but clearly siloing that data is not helpful to that process. And some quick way, maybe it's an API, maybe it's something like that that could quickly transfer data, could allow folks to really try to do a little legwork and figure out what the best way to move forward would be. Or if they find a lender who advertises a product and they say, oh, that sounds like a very good product for me, a very quick way to receive that information, So there's two ends to it. I think it's on the screen that they're looking at. There should be the understanding that there may be another way. And then once you figure out who and what, an easy way to get it.
Yeah. And I guess, look, it begs the question, it begs the question about like, what is the actual incentive of the POS system? At the end of the day, is it to optimize for their capital product? Right? Or is it to optimize for just general growth on the platform? Because you could also make the argument that if, let's say, a user of a POS system is getting capital for growth, generally, activity is going to grow on the POS system altogether, even though they might not be taking on financing from the POS system in addition to their technology. And so, as you think about like building towards that future state, right? Like, do you see the burden lying, I guess, not just with the POS, but with other stakeholders? Is there other technology players out there that need to be kind of taking this up and really considering it? Are there other lenders that you think that are out there that are looking to find ways to assess this data to underwrite? Because I guess this is a fairly significant type of change, across the industry. And I think one of the hottest topics generally is using different types of data sources to underwrite, within CDFI industry, outside of it, altogether. And so who are the players that you think need to come together to actually consider this type of change? Is it just a lender? Is it just a singular POS system? Who are the stakeholders that should really engage on the topic?
I wish I had a prescription. I
And
think
you don't need to. You don't need to.
that the whole, I guess you'd call it, fintech industry, um, should just really decide that don't silo the data. There's a reason that some of these fintechs now have access to certain data sets that they can underwrite loans very quickly, and that's great for those who want that kind of loan. But let it be an open and fair marketplace. How that comes to be, can't tell you that I have the prescription. But I think if everybody recognized that there's value in transparency and openness, I think we'd probably get a long way towards a better system.
Certainly. And so I guess, look, I mean, from my end, I'm on the infrastructure side, and it's not to say that these POS systems don't have APIs, right? Or don't necessarily offer the data altogether, but it requires, stakeholders to build in their direction to make sure that the data can be exported, processed. I would imagine in a future state conversation that lending tech providers altogether, where whether it's underwriting point solutions, whether it's origination systems, those are the stakeholders that will need to build in the direction of a POS system in order for a greater Jamaica to be able to look at that data, right? You're relying on, I guess, lending infrastructure broadly, whether it's end-to-end or point solutions that are maybe giving you capabilities for those borrowers to connect. So, I think it's the burden or the opportunity for that matter lies on the shoulders of lending technologists as much as it does any other player. So, I guess from my vantage point, we're always thinking about what are the platforms we could build into. We have not yet gotten pushed in aggregate from lenders out there to look at these types of data sources, but that's today, right? A lot happens each and every year, and so I think on my end, I'm going to be a little bit more sensitive to hearing from our customers. What types of data do you want to see? Like, what types of connectivity into other platforms do you want us to build towards? Because the way I see it, I think that there's probably three stakeholder groups. Lenders need to ask for it, in aggregate. Borrowers also need to ask for it, which requires a level of education, I think. And then, at the end of the day, beyond the POS systems that are kind of housing this important and very valuable data for the borrowers, it also falls on folks in my ecosystem, those that are helping to enable the greater Jamaicas and other types of lenders across the U.S. So there definitely is a level of consensus that needs to be built. And I guess with you, I will always say, like, this is conversation number one, but I'm sure there will be many more on this subject. As you think about, your organization over 2024, what are the biggest focus areas for you, right? We're in, nearly a new year, end of 2023, solid year. As we close out this particular conversation, what are you going to be spending most of your time on?
We're going to be spending a lot of time on, like I said, building out the second half of our underwriting process. Like, after we get comfortable with you personally, to digitize that process in a much more efficient way. We're going to be investing in technology that helps us move a client through our pipeline. Not as much in originating. I'm talking on behalf of Greater Jamaica here.
Yeah, yeah.
Not the originating part, but it's the after that we're going to be spending our time in 2024 moving things along. But I would tell you is that what comes after having a very efficient process on the back end is somehow creating a more efficient pipeline on the front end. So, while 2024 may be for us more of a back end type of investment structure when it comes to technology, down the road, I think we're going to be looking more towards that pipeline and how do we maximize that while still maintaining that community aspect that we talked about. And I think overall the CDFI industry is embracing technology more. I think that it's becoming more of a tool. I think prior to COVID, it was there were fewer CDFIs really embracing technology, and they were handling things a lot of the old-fashioned way. I think COVID sort of was like a big like a rocket in that regard. It forced everybody to see technology as a solution, and I think everybody's more or less embraced it. And I think they're using it as a vehicle for growth. So overall.
Sounds good. Well, Aron, thank you for coming on Capital Compass. Always good to see you. And looking forward to chatting with you soon.